Let me be straight with you. I have been investing for some time now and I've been making progress. We are not there yet, but we are still in progress. Not by gambling, not by following hype, not by following the latest stock trend. I just use a simple, proven strategy. But recently, I have been doing some rethinking because of AI, and here are some 5 changes I have made in my portfolio. This is a disclaimer. It's not by any way a financial advice. Welcome to Ace Financial Diary. If you have not subscribed to my YouTube channel, what are you waiting for? If you have not followed us on our Facebook, do well to follow us. Since I started investing, I keep my investing very simple. Most of the time, I invest in ETFs like the S&P 500, which is a low-cost index fund. It splits your money into 500 companies. On average, it returns 10% per annum. That's not me picking the winners. That's just me owning piece of each company. When one company crashes, there's a way they do it to ensure that I do not lose out for that average of 10%. That is passive investing, and that's one of the best financial advice I have been given. But there's a little complication, and most people don't understand it. Right now, to every $1 you put into S&P 500, for instance, 40% goes to these 10 companies. And NVIDIA alone gets 7 to 8% of every $1. That's what is called the market weight cap. The bigger the company gets, the more of your money goes to it. Aside of Berkshire Hathaway and JP Morgan's, the other top companies are pouring massive amount into AI. And here's what really caught my attention. In order for these companies to justify the investment that the investors are currently paying them, they have to generate around $2 trillion from AI. Okay, let me put that in perspective. That is combination of Meta, Alphabet, Amazon, NVIDIA, and Microsoft in 2024. All these companies are not being valued for what they earn today, but what they envisage, what they hope to earn tomorrow. That alone isn't a disaster. But when it is concentrated in one technology, one bet, it tends to be like house of cards. So what did I do? Did I panic? Did I sell everything? No. I put out some amount from my S&P 500. I spread it in all other areas. There's one question most people are not asking. What if the biggest stock returns in the next 20 years does not come from America? I know that sounds stupid, that sounds ridiculous. We know America to have been on top. What if reverse is the case? Because some years ago, UK had 24%. That means they were on top. In the 80s, the Japanese, when they were producing their car, they were somewhat at the top. See, one thing these have taught me, I read a little of history, is no companies or no country stay on top forever. Things can change. Markets can shift. Economic leadership can change. The only certainty in market is uncertainty. Putting money into global index fund like the VWRA is a smart idea. This single fund invests across 3,700 or 3,800 companies in developed and emerging markets, including US, UK, India, China, and all of that. Yes, it is still heavily weighted towards US market, but when the US sleep and the other country picks up, it has a way of adjusting. That's about 19% per annum. I think the market generally is, for me, is in 4 areas or 4 ways people tend to invest. One of the areas is when it is hyped, when it's expensive, it's large. For instance, Tesla, Amazon, Microsoft, S&P 500 and all of that. People tend to invest more in that. And there's another area. The second area is where the valuation is not huge, but the income is stable. And there is this third area of the market that people invest in is where there is almost no revenue, but the valuation is high. And the last one is the area people overlook. These are four areas I can tell you I think the market generally is being categorized. And you know that AI is becoming one of the main things. These big companies, they think that as soon as you have the best AI, then you take all the bet. But what I'm saying around is that smaller companies gives the pattern of you picking your preference. When AI model has good quality, it is good for the users and it is serious problem for those that are pumping billions into developing that tech. That's why I personally have chosen to invest in small and mid-cap funds. AI isn't just changing companies, it's changing power, it's changing currency, it's changing the trust in the financial system. And when this happens, gold becomes attractive. Take a look at China. Between 2009 and 2025, they were steadily buying gold. And the chart shows recently that they are buying gold faster than ever. The Bank of America said that they should hold about 30% of their reserves should be gold. That's from the 20% that was formerly there. That's to say there was an increase, 10% increase in the reserve as gold. What am I doing? I'm making this change concerning gold. One, I'm buying physical gold. That physical gold increases, doesn't depreciate, but I can also buy ETFs as gold. I share gold. I share physical gold. Go to your Trade 212, go to your Trade Republic and buy this I share physical gold. From all of these data I've gathered, I am putting small amount of my money into this portfolio. I'm not putting everything in it. I'm putting some in gold. And the final change I made was to hold more cash. I know most people are making mistake in this as well. I'm not saying you should do what I'm saying due to this AI stuff. I'm holding more cash. Now listen, I don't have cash under my bed. I'm not holding cash under my chair, but you have what is called money mutual fund. You can put your money there. Now, this is the thing. When the market crash, you will not panic to sell your investment or your stock or your ETF. You just have to take from the money market fund, or you have to take it from your emergency fund. This is the recap of all I've been saying. I made changes in these 5 areas. I had to reduce small amounts from my S&P. I invested in global index fund like the VWRA, and I bought some gold, whether you call them physical gold or the ETF. I also went into mid and small cap fund. And lastly, I have some cash in my reserve. I put them into high yielding savings account and also emergency fund and also money mutual fund. Now, I am not saying AI is going to crash the market. That's not what I'm saying. I'm only having an idea. I'm only thinking when this AI decide to crash the market, that means I will not be at a loss. I will not be at a risk. But when it does not, I'll be on a safer side. Here's the thing. Do your own research. I hope this video have helped you. And if it has helped you, tell me on the comment section how you intend to make changes in your own portfolio. I'll see you in my next episode. My name is Ebe Itali.